Hey everyone, my name is Peter and my trade number 199 is AAL 14 put. Now let me decode this for you. So AAL is the ticker symbol for American Airlines. I am on Yahoo Finance. As you can see, it's a free website. You can search for pretty much any symbol, any publicly traded entity. So American Airlines, I don't need to introduce it. It's one of the bigger airlines. And we can see that it's currently trading at 1360. Now, if we look at the last, let's say 5 days, we can see that it was trading not long ago at 1433. And so obviously it came down a little bit. If we look at the last 1 year, we can see that since June it's been hovering around the $14 mark, but prior to June it was more around the $18, $17. So selling a put option at $14 to me it sounds like a fairly logical and low risk strategy. So what expiration did I go for? I went for the 20th of January, which is a monthly expiration. When it comes to stock options in the US market, at least, every third Friday is a monthly option. The other ones are weekly options. Now, why do I go for monthly options? It's because they are there's a lot more activity happening. There's a lot more volume, and more volume means smaller gap between the ask and the bid price. So it's easier to get out of trades if they go against us. So here we can see the $14 put option, and it was last traded at $1.13. So because it's currently in the money, so the current price is 1360. That means 40 cents. You got to take away 40 cents. So your the extrinsic value that you receive for this is $1.13 minus the 40 cents. And what would be the delta? So that's another critical indicator that I look at. So I came across this website called barchart.com, and I signed up on their free account. So I am currently testing it. So I put in AAL. Once again, it gives you a bunch of information free of charge, and I click on options, volatility, and Greeks. And this is where I also need to select the expiration that I used, and I go for my put option $14. It shows the same information. Last time it was sold for or traded at $1.13, and the delta is what I was looking for. So because we're very close to the actual share price with our $14 strike, the delta is minus 0.5. What it means is that $1 move in the share price is equivalent to 50-cent move in the option price. So the theta is another one that I occasionally look at. So in this instance, if the entire market freezes, then every single day I will gain about $1. So 1 cent, and you need to multiply it by 100. So for this particular trade, I used up about $250 capital, and I received $1.13 times 100, so $113 into my account. And once I close it, then obviously I will need to give back a portion of that premium, provided that it will be a successful trade. Now the last information that is very critical to keep in mind and to check is the earnings, because the next earnings season is about to kick off. So let's take a look at the earnings for AAL. on the Nasdaq website, which is once again free of charge. And earnings, click on earnings. Takes a bit of time to load. Here we go. We see that the estimated earnings announcement is 19th of January, which is 1 day prior to my expiration. That's not ideal. So I should be, hopefully, I will be able to close this trade before the company's next earnings announcement, because I don't normally like to take risk with earnings. I do have some earnings trades occasionally, but with this particular company, if I went for an earnings trade, then I wouldn't sell the $14 put option. So this is my trade number 199. I will see you on the next video. Thank you for watching, and I hope you learned a little bit. And I will have the link in the description to this particular trade, so you can follow it. You can see when I close it, and or if it works against me when I roll it, and how I roll it, how I make the adjustments. So just make sure that you click on the link in the description. Thank you for watching. If you're new to this channel, please feel free to subscribe. Thank you for watching. Cheers.